I'm going to go ahead and get started. It is the start time, and there's quite a lot to get through. So anyone else who comes in will be able to catch up, and also there will be a recording which will be sent out to everybody automatically. And so let's go ahead and get started. So over the summer, you probably didn't hear a lot from me. Several reasons for that. I'm currently in the UK and have been busy with sort of moving over. But the other thing is that I have been really focusing on developing some very unique templates for EdgeRater. And I've kind of had my head down doing this and it haven't really popped up for air until now. Because now everything is complete, and I really wanted to take this opportunity today to give an overview, but you'll also get an idea of how to run these templates, and you'll come up with some of your own ideas for investigation. But I think you'll find that you are going to be able to see some very unique information very easily in the program that will really help with your trading. So the idea for today, as you saw in the invite to the webinar, did you ever wonder if your trading system could be improved by restricting trading to particular days, weeks, or months? That's often worth thinking about. Or if you were only going to trade when particular technical criteria were present. You can think of many different technical criteria that could be present. So many to think about, and kind of hard to test all of them in conjunction with each other. And that's kind of one of the ideas where this webinar and the templates will help address. So we'll explore here how to determine the impact of conditions using a brand new set of EdgeRater templates. And actually, there are really 3 templates of interest. 2 are actually brand new, and 1 was released in May this year. There was a webinar about that, and you can go back to the webinars page on EdgeRater to take a look at that one. I'll cover it briefly here too. This can lead to many useful insights, one of which applies this month, October, and that is in the second half of October. Historically, if you look back over the whole history of SPY since inception in 1993, I believe, to today, and you look at some of the seasonal factors of SPY, you'll discover that the second half of October, weeks 43 of the year and 44 of the year, are, one of them is actually a week that SPY has done exceptionally well, outperformed all other weeks of the year. And the other week is a week in which SPY has underperformed to the extent that it is the worst performing week of the year. So really interesting to see that. But I'll show you which is which, and also I'll show you how to easily find that among many other things. So that's the kind of the gist of it. The big idea that I had was as follows. Every trading system will ultimately tell you when to enter a trade and when to exit. You can historically look back through entries and exits. And the idea that I had for these templates was to take each one of the trades, historical trades, and tag them. Tag the trade. And you can tag it. An example of a tag might be a date-based tag. For instance, if the entry date of your trade was the 3rd trading day of the month, we'll tag it with 3 for trading day of month. Okay, you can do that for weeks and years and days of month and trading days till end of month, all kinds of things like that. That's very interesting. Another way of tagging trades is by tagging them with a technical criteria. For instance, implied volatility, which is a fairly new indication available in EdgeRater. And EdgeRater will provide implied volatility numbers for the 30 day implied volatility, as well as 11 other periods of implied volatility, ranging from all the way from 3-day implied volatility up to 720 or 2-year implied volatility. So another idea here then is be able to tag your trade with whatever the implied volatility was on that day, the entry date of the trade. It will be in a certain range, and we'll put that range into the tag, and we'll be able to analyze those tags. So once you've done all your tagging, you then run an analysis to determine if the tag values help or hinder the trading system. So for example, does my trading system, my historical set of trades that I have, either I have been trading or a backtesting program has shown me that these trades are what I would have taken with my system. Well, if I then apply my tagging, is my system, does it perform better if I only trade on, say, the 3rd trading day of the month? Or does it perform better or worse if I only take trades when implied volatility is in a 10 to 20% range, or whatever range, many different ranges, okay? You'll see how all this fits together in a second. That is the big idea. So we'll come back to the slides in a sec, but what I wanted to do is just quickly show what the reports look like. So in EdgeRater, you can run a trade simulation, and you will end up with an entry date, an entry price, an exit date, an exit price, and a profit and loss percentage. Those are the main things. There's some other information in there too. Okay, this first set of columns are generated by an EdgeRater trade simulation. You don't have to do a trade simulation in EdgeRater. As long as you have an entry date and an exit date and a profit and loss percentage, you can actually input that into this program too. But we'll use EdgeRater because it really fits together really well with the system, makes it very easy to do the analysis. So what you're looking at here, this is a trade list produced by EdgeRater running a simulation of trading SPY every single day since inception. So that's 1/29/1993, all the way down until today. Well, let's see what the very last day of this report is. It should be actually Friday. 10/8/2020. Okay, so it's taking SPY and it's doing 1-day trade in SPY every single day of its existence. So the first trade would be 1/29/1993, exiting February the 1st, 1993. Happens to be that 1/29 is Friday, so it's holding for 1 day, close to close, selling on the Monday. The next trade would be opening on the close on the Monday, selling on the Tuesday, opening on the close on the Tuesday, selling on the close on Wednesday, etc., all the way down through the history of SPY. Okay, normally in EdgeRater, columns A through Q are what you would get. So the idea then of tagging is to go in and take each one of these rows. I'll try and zoom that in a little bit further for you, if that's easier to see. Okay, take each one of these trades and tag them with tags. So the first tag I'm looking at is column R, and my tag name is day, which it stands for day of week. And so each one of these rows will have a day of the week. So the first one is Friday, Monday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday, and so on. The second tag is week. Okay, this happens to be week 5 of the year. Then we go into week 6, week 7, week 8. Okay, then we just keep going along like that. These tags, I'll show you how these tags have been defined and how you can define your own tags and how to apply them in a second. And then you've got day of year, you've got day of month, you've got trading day of month, and then trading days till the end of the month. Okay, all the way through the list. Right. So tagging, very important concept with this idea. Once you've tagged your trades, you are then able to run Monte Carlo analysis on various combinations of tag. And that will produce a report which looks like this. Try and zoom this in a little bit. Okay. And if you missed the last webinar on Monte Carlo analysis, let me kind of just briefly summarize what you're seeing here. The columns to pay attention to, probably the column most people would pay attention to is this column here, the blue one, FE50. This is the final equity of taking a sequence of trades, sequencing them together. X number of times can be defined in the when you run the template, and it's a relative final equity. So if it equals 1, it means that the final equity is what you started with. If it's anything over 1, that is a gain in the system. Anything less than 1 would be a loss in the system. So final equity. The 50 is your 50th percentile. So imagine taking a bunch of Monte Carlo simulations. You've got one set of trades. Maybe it's, say, this first row here. Maybe we're looking at Friday. This is basically the result of combining all Fridays together, randomly sequencing them in Monte Carlo simulations and running them through thousands of simulations. The 50th percentile is if you run your 1,000 simulations of Fridays in various combinations and you stack them all together, then the 50th percentile one is what happens in the middle. Okay, it's the one. It's the doesn't mean it's the most likely to happen. What it means is that 50% of the outcomes were at least that value, 1.02. Whereas the FE5 column is the lowest 5% of the outcomes. So what this is saying here is that the lowest 5% of the outcomes had a 0.87 final equity. And the FE95 is saying that the highest, well, it's actually saying that the lowest 95% of the outcomes had a highest final equity of 1.18. So it kind of gives you an idea of the shape of this cumulative distribution. You can look at the other webinar we did on Monte Carlo analysis to work out what that actually looks like and what it means. But the FE50 is the one that I would pay attention to. It's your 50th percentile. It's where if you run the simulation thousands of times, then you're going to get, the simulation showed that that number was achieved 50%, at least 50% of the time. That was the maximum value, if that makes sense. The maximum drawdown is very similar in that you've got MD5, MD50, and MD95. But it's telling you, instead of telling you what your equity was, it's telling you among the various combinations of sequences of trades you put together, you will have different drawdowns for each sequence. So this is telling you the 50th percentile level of drawdown, whereas the highest 5% of drawdowns were sort of 17% drawdown in this case, and the lowest 5% of those sequences were 2.7%. So because you're putting these trades together in random sequences, you're going to end up with a bunch of different final outcomes and a bunch of different maximum drawdowns. And this really is trying to summarize what they were in those sequences. Okay, so this would be saying that for Friday in SPY, you had a final equity 1.02 for FE50 on Friday. So you can look down quickly through here and say, well, here we are. This is Friday, Monday, Tuesday, Wednesday. You can immediately see that actually Monday happened to be the best day in terms of final equity for trading SPY. Trading at the close on Monday, remember, because this is a close-to-close simulation. And the tags that have been put in here are the tags on the entry day. So trading at the close on Monday and closing that trade on the close on Tuesday happened to be historically the best time to trade SPY. The worst happens to be Thursday. So trading at the close on Thursday, opening a trade at the close on Thursday, and closing it at the close on Friday happens to be the worst. Still, the FE50 value is 1, so you didn't really lose any money by doing this at the 50th percentile level. However, bearing in mind SPY has really gone up over that period of time, so there is definitely an upward bias underlying in SPY. Also important to take a look at the drawdowns. But this is kind of how the simulation, how the summary will work. It's basically taking these tags, grouping the trades together by tag, and then running Monte Carlo simulations on those groupings. And the grouping that's shown here is basically a single tag. So we're grouping them here by day of week, Friday, Monday, Tuesday, Wednesday. Here we're grouping them by week. So we're taking all week 5s from the whole history. We're looking at, if you look over at the count column, it tells you the number of trades that made it into that group. Okay, so we're talking about week 5 in this case that I've just highlighted. There was 136 week 5 trades. So there's 5 trading days in week 5, and however many years there have been since 1993, you can figure out that should match to be about 136 week 5s that you would have had. And it would just depend on when the starting and ending date is, because here you've got 140 for week 6 and week 7, and so on. Okay, so you can go all the way down through there. Once it's done, calculated that, it calculates all the months, which was the best month to be trading. Looks like April was the best month to be trading, SPY, that is. Then it's coming down, looking at the years. You can look through all these years. The day of the month. Okay, so lots and lots of really, really good information in here. All right, but as you will appreciate, having all this information in a spreadsheet really lends itself to doing some better organization. So one of the first things that you can do is just sort this largest to smallest in terms of FE50, and you can find that 1.21, that's quite significantly higher than most of the other final equities. Okay, 1.21. And it happens to be for week 44. Week 44 is the very last week of October. Okay, let's go down to the bottom of this list. So now we get into the worst in terms of final equity. Well, the worst, with a final equity of 0.93, FE50 value of 0.93, is week 43, which is the second to last week of October. So it's very, very interesting information. So Jerry, the simulation is, let me just bring that back up. Some people would have joined here late, so I just want to make sure everybody's on the same page as we go through this. And the simulation was, the simulation basically was SPY, okay, close to close trade, 1 day hold through the entire history of SPY. And here's the trade list. Don't worry too much about that now, because we're actually going to go through and show you exactly how to produce this report in EdgeRater. But I just wanted to give you an idea of the report, what kinds of things you will be able to see. And now we're going to go through and look at the flexibility that you have in EdgeRater for doing not only this type of tagging, which is a seasonal style of tagging based on days, weeks, months, and years, but there's also tagging based on technicals. There's tagging based on your own, you may say seasonals or date-related tags. So you can define your own tags. Very, very, very flexible tagging system in here. So anyway, these are the reports, and now we're going to go and take a look at how this is all put together in EdgeRater. Sounds good? And I'll take a couple of questions here. So yeah, Kevin, yes, good question. And yes, I did just say it could be correct. For those of you who can't see, Kevin asked a question: could a tag be added for the 2 weeks before and after presidential elections? Be interested to see if a pattern emerges here. That's exactly what this is designed to help you discover. You would have to go through. You'll see in a minute as we go through it. But yes, you can do that, exactly that. Okay, so now there's a new tagging system in EdgeRater, and the tagging system is based on Excel files which define your tags. We'll see that in a second. The location on your hard drive is in, as all EdgeRater files are, they're under Documents, EdgeRater, and then tagging is under Configuration/tag files. And in the tag files folder, you'll find, well, first of all, there's a read how to use tag files. That's an Excel file which just has some information in there for you. But then you'll see that there are some other files in here. There's files called tag layout files, and there's files called tag lookup files. And I'm going to go through what they are right now. So a tag lookup file is a map of dates to tags. This is the seasonal one that I used for producing that report that we just saw. And this exists, this comes in the program and is kept up to date by the program, although it doesn't really need any updating for quite a while because it's got all future dates in there up to, I believe, the end of this year, but it will need updating at some point. But the layout is quite straightforward and replicable by anybody if you want to create your own file. And just remember, it's a map of dates to tags. So there's some header information you don't have to worry about putting in your own header information if you're creating your own. It has to have a date column, and then by the side, and then over further on the row, there are columns for the tags that you're creating. So here you've got a tag called day, tag called week, tag called month, year, day of month, trading days to end of month. This new month, don't worry about that. That is just indicating whenever the month ticks over here, and that's just used in this spreadsheet for actually figuring out when the number of trading days till the end of the month. So, but you don't have to worry about that. That's just a something that's in that file. You don't have to put that in your own file. If you wanted to create your own file, you could either add tags to the end of this one. I wouldn't recommend that because this is in the system folder and this will be updated. Your tags will be overwritten. But all you would do is copy this tag lookup seasonal into the folder below there. So not into the system folder. This is the thing we just looked at. This is in the system folder. These are files that are maintained by EdgeRater. You put it in the folder below that, or above that, I should say, the tag files folder. There'll be your own tag files. So you'd create that or copy this into that folder and put your own tags in there. So that's the way that lookup files work. Oh, and there's some information here about how to do that. Create your own tag lookup file. You basically need a header row named ER header row. You need a date column, and then you need one or more tags. And then there's tag layout files. Tag layout files basically allow you to pick and choose tags from various tag lookup files to include in a report. So each row in here represents one tag. So tag lookup file is the type of this particular row, and then it tells the under tagger, it tells the lookup file to investigate, and then the name of the tag that you're going to be pulling from that lookup file, and then a format. This is just the format is just for Excel to make it look pretty. That's all that is. So you can just define, you know, if it's going to be what color it's going to be, for instance, how many decimal points it might have, that kind of thing. Okay, so that's what the tag layout seasonal looks like. It's just pulling day, week, month, year, day of month, trading day of month, and trading days till end of month from the lookup file. Then there are tags based on technical indicators. So you'd have a tag layout file, but this time instead of going into a lookup file to get this mapping of dates to tags, instead the type is a chart script. And the chart script is in EdgeRater, it's your script that generates indicators and scans, and it's the flexible programming of things for your charts, things for your templates. And once they're in chart script, and there are hundreds in there already, by the way, indicators, you can actually reference them within one of these files. So here's an example which is using relative strength moving average. The type in this case, instead of, remember before it was tag lookup file, and there are only two types, tag lookup file or chart script. Okay, you give it the name of the chart script, any parameters that you want for that script, and then you give the tag a name. This is the actual name that appears in the header of the reports. The format is, as I said, it's just to make it look pretty. So you can change the coloring of this or justification, for instance, in the cell. But then there's this idea of range converting, because indicators can have many different values. You know, the output of an indicator that's giving you, say, 0 to 100%. In steps of 1, there's 100 different values there. So you might not want to go to each individual one separately and gather all of your trades based on those very finite, very fine granularities. What you might want to do instead is take a range of values. So take a 10 to 20% range. So here's how you define ranges. Okay, we're still in the tag layout file. And now we're using this range converter. So a range converter is just a spreadsheet within the layout file called range1. It's referred to here. And then this is what the spreadsheet looks up like on the right-hand side here. So it's basically, this one is saying that if the output of that script is less than -20%, then the tag is going to be this. It's just, this is your text tag, essentially, less than -20%, negative indicated by the brackets. The second row is if it's greater than or equal to -20%, but less than -15%, then the tag is going to look like this. Okay, this will all make sense when you apply these to the template, which we'll show soon. Anyway, that's kind of how technical indicator tags work. There is maybe something else that would be a little easier to understand, perhaps. Implied volatility percent rank. As I said before, implied volatility is something newish that's been added to EdgeRater. And there are implied volatilities ranging from the 3-day implied volatility all the way up to 720. And here is an example of a tagging file laying out tags for 3 through to 720. This time the range converter, range1 worksheet within this spreadsheet is just saying, it's a little easier to follow this one. It's just saying if the percent rank is between 0, so greater than or equal to 0, less than or equal to 10, then the tag is going to be 0 to 10. If it's greater than 10, less than or equal to 20, the tag is going to be 10 to 20, all the way through to 90 to 100. You'll see how this works out when we run the template. But it just makes for a very flexible system. And here's another one. All of these ones, by the way, are in the system. They've been delivered. They exist now on your hard drive if you've installed the latest version. And there is a question just about that from Farida. Can I know what the current version is? Yes, the current version of EdgeRater is 20.0038. The current version. And we're talking about EdgeRater Pro 2020. This is all available in EdgeRater Pro 2020. Let me just ensure, 1 second, just to make sure we're all on the same page here. EdgeRater Pro 2020. Okay, there are a couple of products here, EdgeRater Pro and ETF Trading Bandit. We're talking about EdgeRater Pro 2020. The prior version of EdgeRater was called EdgeRater Pro, yeah, that's what I thought, was called EdgeRater Pro Unleashed, and EdgeRater Pro Unleashed is the old version that if you still have that installed, you should really uninstall that and install EdgeRater Pro 2020, which has all of the things that were in Unleashed plus more, plus. Okay, so here's an interesting tag based on a technical indicator. This is based on the Connors RSI indicator. And Connors RSI, if you're familiar with it, has parameters of 3 to 100. And so this layout will then just tag things in a range from 0 to 10, 10 to 20, 20 to 30. Very useful to finding out which ranges of Connors RSI have produced better final equities in the past or lower drawdowns. So it's very, very handy. Okay, and so the new templates in the system, I mentioned there were 3 templates. One is we talked about before, which is the Monte Carlo simulation. We talked about that in May. That's when that was released. But the 2 new templates that I've been working on over the summer are the trade simulation batch run template and the profit boost template. The profit boost template is the real thing that does the tagging of a trade list and the Monte Carlo simulation of the trade list to produce the file that we just looked at. But the trade simulation batch run is a very useful template that allows you to do trade simulations quite easily because there are some sort of pre-built configurations already in there. So we'll take a look at both of those in the next half an hour. Okay. So let's go now. Let's just go to quickly. I don't want to sort of confuse you with all the configuration files too much, but I'll just say that the trade simulation batch configuration, this does help with your running a batch of trade simulations. You can configure a batch of trade simulations, and you do it like this. You basically the format is a script. Okay, in this case, and this is the script that I used for the simulation we just looked at. So the entry script here is always true, means that it's going to enter every single day. And the trade is using a fixed hold period, so it's exiting after 1 day. That's how this worked. And there are 3 trades or 3 simulations within this particular bulk file or batch run file. One is a close to close simulation. Next one is the close to open simulation, and the final one is open to close simulation. All right, that's how that looks. All right, so let's go on to let's go into the program, and we'll see exactly how to use these. It's actually a lot simpler to use it than it is to explain it. I've tried to make it very easy just to run these. So let's take a look at trade simulation batch run. Now, this is something that everyone who has EdgeRater Pro 2020 with the latest templates can do. And I highly recommend that you follow along with this either now, or well, probably it might be a bit tricky now, but take a look at the replay of this and you'll see just how easy this is to run. So first off, we're looking at the trade simulation batch run. You'll notice that I've created a list. Okay, so yeah, I'm just gonna get into that. So I've created a list here called SPY only. It contains just SPY, and I'll show you what's in this list. It's SPY, essentially. And I've set my data update options to be 100 years. There are not 100 years of SPY data, but it's more. That's okay. So, and then I've updated it. So I've got from 1/29/1993, which was the first date of SPY, to 10/9/2020, which was Friday. So it's a symbol list just containing SPY. You don't have to do this. You could use, say, a full list here and just check the symbol SPY in here. The problem with doing that is if you're really doing some good analysis on SPY, is that it is a little cumbersome to keep going in and checking just SPY. So I've created a list with only SPY. And there's nothing to stop you running it on more than one symbol either. You don't have to run this on one symbol. But for ease of use here, and also because I'm really getting into the nitty-gritty of SPY performance, it makes sense to have just SPY in my list. Okay, so what I'm going to set in here is an input configuration file. And by default, it's already going to be set to the sim daily returns. Okay, sim daily returns. That's the one we just looked at in the program. You don't even have to know what's in there. Sim daily returns is there by default. But it's going to output the results of this run to the reports folder into, and you can choose where you want to put the output. I'm going to put it in my trade simulation. I'm going to change this because I've already done this once on my trade simulation 1. I'm going to put mine in my trade simulation 2, just to be creative. And then override the dates. Okay, type a 0 for no. I don't want to override the dates with these dates in here. I want to use the full data that's available in my list, which goes from 1993. Okay, I'm just going to run this. You'll see that it says processing, now close to close, now close to open, now open to close. And it's soon going to be done, finished. So this has run 3 trade simulations. Basically, there are 6,975 bars in that data. And we now have 3 results. This is the first step. And it's produced for me 3 files. And if you are looking at them in reports in EdgeRater, you can select one of these rows here, and then go up to the top and say open link to document. Okay, so this is now going to show me the trade list that it's just produced. All right, you notice there's no tagging in here. It's just purely the trade list. All right, you don't even have to look at those. It's produced it, and they exist now in the folder my trade simulation 2. All right, that's all I'm doing there. Now I'm going over to Profit Boost, and what I have to do now is choose some input files for this template. It can be just one single file, which I'm actually going to do. I'll select files. I'll go to my trade simulation 2 here, and you'll see the 3 outputs here. Okay, close to close, close to open, open to close. I'm going to choose the close to close. Monte Carlo settings are going to leave as is. And now here's the interesting part, okay, where you get to choose your tag layout file. Now, by default, the seasonal file is chosen. And you'll see the way that is presented. And it's basically giving you a column for each of the tags. And it's just selecting each one. Even though it says these are tag combos, only one of the tags has been selected. You do have the option in here to go and you can enter a 1 or a 0 in these cells, and you can do combinations of tags, which actually gets quite interesting too. I'm not going to do that for now. If I was to select a different tag file, just show you how this works. Say I select let's say the implied volatility tag layout file. You'll see now that this whole area here has been changed to include the tags that are in that tag layout file. But I'm going to go back and just use the seasonal file. Okay. And then all I do with that is just press run. You'll see at the bottom, this will take a little bit longer, but you'll see that it's running tag combo 1 here, tag combo 2 now. So it's looking at weeks. Tag combo 3, so it's now analyzing months. Tag combo 4 and 5. And finally, tag combo 6 and 7. Now it's finished. And we have the report. And hopefully your screen will show that. We have the report that's been produced. All right, which is exactly the same report that we looked at last time. So it's very simple to produce these reports, but the information is just phenomenal. And I'm pretty sure you're not going to find this information anywhere else. All right, so now in EdgeRater, now I'm not looking at this report in Excel. I'm in EdgeRater, which actually gives me a little bit. It's a bit easier to use inside EdgeRater, because to sort, I can just single click on the header. If I want to find out which had the highest drawdown at the 50th percentile level, I can see that 2008. So is that a surprise to anybody? What had the second highest drawdown? 2020. Okay, so these are obviously the years that had lots of volatility. So it's kind of nice to see that, because it's it gels with your knowledge of the history of the market. These are things that happened. It gives you a good sense that the data is correct. And I've done a lot of testing of this data, so be assured that the data should be correct. But it's still nice to have the verification. 2008 was a bad year. Everyone knows that. It's right here at the top. It was a bad year. What was the best year? Let's. What you can do for finding things like that is you can just say, I'm just going to select years that are not star, so years that actually have a value. And now I'm going to sort by FE50. So the best year was 95. Worst year was 2008. Oh, 2002 is in there too. Okay, so worst years, let's see where we went with 2020. Where did 2020 go? Oh, it's right in here somewhere. So 1.02 is the FE50 level. But it turns out that actually SPY itself, if you take SPY, just every single trading day of SPY, all of the returns for all of those days, you run a Monte Carlo simulation on the entire thing. 1.02 is what you'll end up with. So really, if anything is better than 1.02, 1.02 is your average. So if anything is better than 1.02, then it's better than the overall. Okay, so 1.07, 1995 was a good year, but it's not really useful in terms of figuring out your own trading to look at years, because those years have already passed. They're not going to happen again. It might be more interesting to look at days and weeks and months. Trading days till end of month, I think, is a very interesting one. Let's take everything trading days to end of month and then figure out over here 1.12. So it's very, look at that, 1.12, one trading day left till the end of the month on a close to close of SPY gives you a much better final equity than any of the other trading days. Very close is the 12 trading days, but the worst is 23. But also important, this brings up an important point, is it's rare that you'll get 23 trading days at the end of the month. It only happened 33 times in the entire history since 1993. So always look at the count, make sure you're dealing with a good set of data. Once you're in here, by the way, in this report, again, these are all linked to the tagged trade simulation. So I can click on a row and I can click on open a linked document. And now it's going to give me the trade list, same trade list as before, but the actual tagged version of it. And this is the kind of the source that the profit boost template used to, yes, month end effects for sure. The profit boost template used for gathering together the correct groupings of tags and running the simulation. So super interesting. Now I want to quickly, and then I'll open it up for questions, more questions, but let me just quickly, there's so many things you can do with this, and I'm sure everyone has lots of ideas. But let me show you something that I found interesting. Might give you some more ideas. I'm still going to use close to close of SPY as my starting simulation. Close to close. I'll make sure not to use the tagged version. I could, but it's just use that one. And now let's take a look at a layout file for the MA relative, moving average relative. All right, I'm just going to run that. Okay, so moving average relative. Let me see if I've got the slide which shows you what those tags do. All right, so MA relative, I've just chosen, and this is using a scan, a chart script, which is one of the in the scan section of EdgeRater, which is close above MA. So it's basically giving a true or a false if the close price is above the moving average, essentially. I.e. a true if the close is above the moving average, and a false if the close is below the moving average. So, and you've got different moving averages here, 3, 5, 7, 10, 15, 20. These are all simple moving averages. So it's a very simple script, this C above MA. But anyway, if we put it into a tag layout file, and then in that tag layout file, we'll say if it's equal to 0, we're going to say the tag is below, and if it's equal to 1, we'll say the tag is going to be above. Then that's how that fits together. So what's happened here is now in the report, and see if I can zoom in a little bit. Yeah, so now in the report, you've got your belows and aboves for all of the different moving average periods. So let's just, first of all, just go ahead and sort by FE50. All right, so there's 2,900. So the highest one is 1.04. Remember I said 1.02 is your mid-range. That's if you don't apply any tags, you'll get a 1.02. Okay, 1.04. And if you look at what 1.04, which tag produced that, it is close below the 5-period moving average, meaning that if close was, meaning that if you took the entire history of those SPY trades and you just looked at where close was below the 5-period moving average, you had a better return than if well, you had the best return out of all of the returns, actually. But interesting, and it's very important here to pay attention to the maximum drawdowns as well. And because by looking at this, you might just draw a conclusion that you actually have much better trades if you just consider trading SPY when it's below moving averages. Because look, all of the moving average periods from 3 through to, we've done through to 200. In fact, 200 is the one that doesn't work out like that. But most of the moving average periods from 3 through to 150, you get better results by trading SPY close to close if SPY is below those moving averages, which may be counterintuitive, but also really pay attention to the drawdowns that you'll achieve or that you might expect. Okay, because that's another very important consideration in trading. So if we sort by drawdown, so the highest drawdowns occurred, and this is really very interesting because now look at the way this is, the view that you have here. Yeah, so the view that you have here is very consistent, that the highest drawdowns occur when close is below the 200-period moving average. right? But as you go down through this list, you're getting more and more drawdowns. So that's kind of indicating that you've got a much higher volatility as SPY closes below those moving average levels. And it's clearly shown here with the way this is this final tagging is showing. Okay. Let's see. Oh, sorry, I'll come and look at some of the questions now. Okay, so Ross, can you show us some of the other indicator lists like the MA? Okay, we did that. Let me look at Thomas. So you have a trade list from a source outside EdgeRater with the entry date, exit date, and profit loss percent. Yes, that is all you need. What do you have to do to get them tagged and into EdgeRater Pro 2020? Good question. I'll give you if you want more exact information on that, we can talk about that offline. But the basic rule is, the basic thing is, take a look at one of the trade simulation files produced by EdgeRater. Okay, this is how I would do it. I'd go and do what I just did to produce a sample trade simulation trade list. And then I would replace those columns, the entry date, exit date, and PL column. Well, first of all, I'd clear it all. Okay, I'd open it up in Excel. I would clear everything. And then I'd copy my own data into those columns. And the reason that I would do it by copying one of these trade lists is because this is marked up in Excel in the way that EdgeRater expects it to be marked up. So you won't go far wrong if you get them in the right columns here. The other columns can be blank or empty as long as you have the expected columns. You know, so I could actually just delete that, and then I could copy my data in here into entry date, exit date, and PL percent. That's the way I would do it, and then save it. But if you need more help on that, I would be happy to help you with that. Okay. Okay, I'm confused how you would use the moving average data you are showing now in actual trade setups. Okay. I'm not sure if I answered that question as I was going along or not, but okay. So how would you use this data? The title of the webinar was Boost Your Trading Results. So for instance, if this happened to be a trade, if this happened to be a trade simulation that you were, or a trade list containing your historical trades, you might be looking for ways to improve the results of your trading, because you may have a suspicion that it's not very good to be trading when the implied volatility is so high. For example. So you can easily run this just to see historically. Obviously, it's not showing you what's happening in the future, but you can see historically how that would have affected your trading. Is it better to trade in low implied volatility environments? Would it be better in terms of final equity or drawdown to be trading when your stock is above a particular moving average or below a particular moving average? It's commonly said if you listen to trading, if you listen to people talk about trading, okay, moving averages, if a lot of people might say it's better to trade when a stock is above the 50 period moving average or the 200 period moving average, or whatever. Okay, well, it's great you want to verify that. You want to have some verification. Let's look at the actual results. Okay, so here, for instance, here's the 50 period moving average. Well, I'm taking all my trades here that I've got in my original trade list. If I restricted to trading them when the price was below the 50 period moving average, I'd end up with a 1.03 final equity and a 9.8% drawdown. But if I waited till and only traded above the 50-period moving average, okay, and there's 4,000 of those trades, I'd have a 1.01. So it's actually a worse final equity. I'd have a better drawdown, 6% instead of 9.8%. So things like that are very interesting to look at. So the simulation that I ran was a one-day close-to-close trade, but it doesn't have to be. This will run on any trade list, and the tagging will occur for the entry day. So when it's doing a tag lookup, it's going to take the entry day of your trade, look up the corresponding tag value from the file, and apply that. That would be the tag. If you're doing it with technical indicators, it would do exactly the same. It would take the entry day. It would find out the indicator value on the entry day, and that would become the tag that would be analyzed. And are there any other questions? I think we've come to the end of the question list. Okay, let me get some feedback. Is this useful information? Yes, so general consensus is it's useful information. And you can absolutely run this on any list. I ran this obviously on SPY. This is my simple example, you know, daily trade on SPY close to close. Didn't even look at the other 3 files that were produced. Remember, I produced the simulation, produced also open to close and close to open. Okay, that's a very interesting set of data to look at as well. And you can certainly do that with very easily with this template. So I ran on SPY. You can run it on. You could run this on a whole list of symbols. The more symbols that you run it on, you know, maybe you've got to be careful, right? If you start running this on the entire universe of stocks, it's a very muddled set of data that, you know, I think you have to really pick and choose what you're going to run this on. But you could pick a nice set of stocks, you know, like the FANG stocks or some utility stocks, natural resource stocks, or something like that. This will be reviewed, available. Yeah, so this is being recorded, so you definitely will get this. Yeah. Now, as you've seen that these templates try and simplify everything. I did have to go through a lot of extra information about how the tagging works, just to give you the tool if you wanted to go and change some of the tags to be your own, create your own tagging. So I did want to go through that, but that did make it a little bit more complicated, and a knowledge of Excel is needed in order to do that. You don't need any database knowledge or anything like that. You have to know how to, in simple, some of the simplest things about Excel, basically. You know, how to basically create Excel files and put data into the various rows. But a lot of the time you can just copy what has been done. That's why I like to have put these examples in already. So I'll go, you know, if I'm trying to create my own tag layout file, I would say, I'll use this as an example. Say I'll use my tag layout relative moving average as an example. Let me open that. I'd say that looks interesting. Okay, that's got one sheet there, which is a list of the tags that I'm going to use, and it's got another worksheet there, which is the converting the range to, you know, be something sensible. And then I would just save that. I do a save as, and I would put it, remember, not into the system file, but I would put it into the one above that, tag files, and I'd say I'd give it my own name. I'll call it tag layout. You have to give it the name tag layout because that's filtered with the template. It will filter on files named tag layout, and I'll call it mine. Okay, and that's how I would do it. But obviously, you then go and modify the data that's in here. Makes no sense to keep it the same. And then when you're in EdgeRater, you would do your profit boost, and you'd say, oh, I'm going to select my own tag layout file, which is in here, and there it is. So then you're running your own file. So I kind of did have to go through that. Interesting thing to note just before we leave is that in November, I'm going to be running a one-day EdgeRater training. Could you let me know if anyone's interested in that? There will be a cost associated with it, but it will be very reasonable. If you're interested, could you just give me a yes? I'm thinking about putting this together. And whereas before I've run, okay, cost. I'm hoping to keep the cost very reasonable in terms of it's going to be okay. I haven't figured out the cost yet, but reasonable is reasonable. When I was working with George Lee, and we would run our weekend workshops. You know, the weekend workshops were incredible value. At you know, they were $250 for the whole weekend. But you know, hoping to do this online thing, it would be basically taking, giving you just some going through some really great scenarios from. I would not go really basic. In fact, what I would do is produce some videos prior to the event, so we don't have to go through the very basics, such as building a symbol list, you know, downloading data. Those things are basic, and there are videos for them already. But I would update those videos and send them out beforehand. What I would want to do in the day training would be look at some more interesting topics, such as how to build a template, how to write a script, how to run templates. So building templates, writing scripts are actually, it wouldn't all be that. That is not going to appeal to everybody, but we will definitely spend some time on that. But there's some really rich information about how you use reports, how you link charts to reports, you know, how the whole thing fits together. And I think after a nice day of training, that you would just be able to use the product so much better, so much better. And you know, and the key, I think a lot of people would like to develop their own templates. People have their own ideas about trading and their own things that they would like to look at. So I would like to get to that stage with this training. So, and the back testing as well. Absolutely. Okay, so looks like people are interested in that. So that would be good. All right, so I'm hoping that would be November, and I will update people on that. I would definitely email. If you're on the email list, which you must be if you are attending this webinar, because I only sent it out to the email list, that would be great. Okay, I think as you go through this, if you're looking at the replay, or if you're not going to look at the replay, but you've got questions about what we just went through, then please send an email to me, and I will judge by the emails that I get whether whether there's a common theme in questions, in which case maybe I'll do a follow-up webinar, or if it's a simple sort of one-off thing, then I'll reply to you directly. But if any questions, please let me know, and I really hope people can make use of these templates. I think you're gonna have so much more information than most traders out there, that it's really going to be worthwhile to look at these templates. Okay, so with that, I will say yes. Thank you for joining, and stay safe, and we'll see you next time.